Good morning. You are watching a live daily market outlook for Tuesday, 6th of March 2012. Highlights of today for the day come during the Asian session as the Central Bank of Australia left the interest rates on hold at 4.2% as expected. As immediate reaction, the RBA stressed again that there is a scope for lower rates should the global economy slow down. As reaction, the Aussie dollar versus the US dollar dipped to 106.02 low of the session after the rate decision released. Also from Australia, current account showed a further widening of the current account dipped to minus 8.4 billion Australian dollars compared to the gap of minus 5.8 billion of the previous month, and forecasted 8 billion Aussie dollars for today. Euro holds its negative tone, losing ground again as risk aversion gaining the momentum. Euro's yesterday's action higher was capped at 132.40 zone, and the pair is pointing lower, again moving, holding below 132 handle. That might risk the test of yesterday's low at 131.59 and the possible further extension of the short-term downtrend of the pair. Shares and other growth-linked assets fell as slowing economies in China and Europe dampened the sentiments. The shares in Asia and the other growth-linked assets fell during the Asian session as slowing economies, as mentioned, in China and Europe and tension over Iran dampened the sentiment, prompting investors to take profits from recent rallies that had been driven by ample liquidity. China's lowering of its growth target and the data pointing to Europe possibly slipping back into recession, as yesterday's services PMI came again below 50, holding below the 50, which is a border between the growth and contraction, increasing risk of Eurozone economy slipping into recession. European Central Bank acted, actually the current news eroded the optimism that had been setting the tone for global markets since the European Central Bank first massive liquidity injection in last December and the recent one of the last weeks. Abundant funds in the system stabilized market and mitigated concerns about crisis triggered by European banks' financing difficulties, but uncertainty about global economic prospects led investors to trim their risk exposure. As a result of this, gold also holds at the lower levels, currently slightly below 1700 support, holding under pressure with technical barrier at 1725 dollars per ounce, still being acting as a main resistance in the short term. Asia, as mentioned, the oil price is still under pressure, but wider picture shows the outlook, shows the positive outlook as wider, larger uptrend of 95 zone is still firmly in play as the oil price hit 110.53 peak last week. As mentioned, the Asian consumer, Asia as the main consumer of the oil prices is now hit by quite high oil prices, and it brings the great danger to the Asian economies as being one of the main oil consumers. On the top, also the reduction of the imports of oil from Iran, mainly from Asian countries that are the main consumers of Iranian oil, might also have impact on the current outlook for the Asian economies. Also brief look at today's calendar. As mentioned, the current account already released and cash rate of Bank of Australia 425 was previous, and the forecast for today. The from UK at from Eurozone revised quarterly GDP is due at 10 o'clock GMT. unchanged forecast, minus 0.3% is seen for today. And Canadian PMI due at 1500 GMT, a slight decrease of the previous release at 64.1, seen today at 62.1 as today. This is today's forecast. A quick look at the markets to see where the majors are commodities standing this morning. Euro is again in defense after brief correction yesterday of 131.59 fresh low. That was slightly below 61.8% retracement to the broader up move from 129.73 to 134.85. Came under pressure as the gains were capped at 132.40, just under the 55 days exponential moving average on the hourly chart, and further easing brought the price below 20 days exponential moving average, keeping the downside more vulnerable, and 131.59 in focus. Loss of this level to open way for further extension of the short-term downtrend of 134.85 double top, and possibly to open way towards 131.00 and more significant support of 125 lows of 1st and 6th of February 2012. On the upside, initial barrier is yesterday's high to 132.40, ahead of 20 days moving average at 132.50. That's a key initial resistance, and 132.81 low of 1st of March, along with the 55 days moving average. Basically, only lift above 133 barrier would improve the near-term structure and avert immediate downside risk. Cable has recovered good part of recent losses after yesterday's brief break below 158 strong support when the pair dipped to 157.85, but quickly recovered, and the bounce higher regained levels highest at 158.80, just ahead of 158.95 previous low of 1st of March. Also 200 days moving average, which is now acting as the key upside barrier, but gains ran out of steam, and the subsequent reversal, subsequent easing brought the pairs price back towards 158 zone. Latest low seen at 158.20. That weakens the near-term structure, as the hourly studies are now pointing lower, and MACD already below its midline. Break below 20 and 55 days moving averages keeps the pressure and the downside, and the risk seen on the loss of 158 and 157.85 and 157.70, which is also very strong support, would risk further easing down possibly towards key short-term support at 156.50, which is the higher platform, where is also 90 days what is 55 days moving average on the daily chart, a loss of which to dampen the current positive structure built up of January's low at 152.33 and the latest leg higher of 156.50, and that would keep the possibilities of further fresh break above 200 days moving average, and the possible test of 160 and 161 targets out of reach for now. Break above 159 is to refocus levels. 159.91 is the previous high, and then 160.00 is psychological target ahead of 160.90 static resistance, and 161.00 161.8 Fibonacci extension. The dollar yen holds a sort of positive tone, but rather neutral studies on the hourly chart after finding a support at 81.14 yesterday. Current price action is seen moving within 20-30 pips range, and might see perspective for further gains as long as 81.14, 81.00 support zone holds the downside. That would keep the upside in focus. will break above 81.57 to open next significant resistance zone. First 81.85, yesterday's fresh 9-month high, and then 82.20. Our next target. On the downside, the loss of 81.14 and 81.00 would risk further easing, with the initial supports at 80.70 zone ahead of our key short-term support and higher platform at 80.00, loss of which would be signaling a stronger reversal of the strong uptrend of 76.00 base. Daily studies are still firmly bullish, but RSI hovering around the barrier of the overbought zone might be signaling a stronger corrective action at this point. Yet to confirm, no signals of such a action so far. Dollar Swiss near-term positive action of yesterday's low at 91.04, where the dips were contained by 55 days exponential moving average, and currently attempting higher with clearance of yesterday's high at 91.60 to open way for a stronger recovery of 89.30 double bottom posted on 24th and 29th of February. As so far the pair retraced exactly 61.8% of the latest down move from 92.98 high of 16th of February down to 89.30. Next key barriers are at 92.00, and the most important and the most significant levels are 92.50 and 93.00, previous range ceiling and the recent high where the latest easing started. Loss of which, break of which is to confirm the bottom at 89.30 and refocus upside the levels with a possible retest of 95.73, recent high posted at the beginning of January, to come in play on firm break above 93.00. Gold price remains under pressure as the recent sharp down move of 1790 dipped to 1686 on 29th of February, but recovery attempt was capped at 38.2, retracement at 1725 zone, and further easing is seen. Yesterday's higher low at 1693 now comes under pressure as price lost again 1700 support, with the loss of 1693 directly to open 1686 low, possibly to trigger further weakness and extension of the recent sharp down move. Holding below 1700 and today's close would be confirmation for this, and possible further easing to target 1656 and 1625 Fibonacci levels. A brief look at the crude oil also. The price is currently in the sideways movements after bouncing off yesterday's low at 105.50, holding between 106.60 and 107.30. We need to see break above this level, which is static resistance 107.30 zone, in order to improve the near-term outlook, as the hourly studies are attempting to break lower, with immediate resistance at 106.80 20 days exponential moving average and 107 55 days moving average. Lift above these two dynamic barriers, and 107.30 is to signal a further extension of the latest bounce of 105.50. Holding below these levels keeps the downside vulnerable, as also there is a channel support at these levels, and the loss of 105.50 to refocus previous low, and more significant support at 104.83. Have a nice day.